Hey besties, it's Money Monday. I'm popping up on you early. Yes, don't tell my team because they're going to be mad, structure and all. But it's Money Monday. The market is down. I figured we talk about it. I was getting a whole bunch of questions about what should I do. The market is down. I'm worried. Don't trip. We're going to talk about it. And if you have any questions, hey Rashana, hi Marvy, hi Cicely. If you have any questions, put them in the chat, put them in the comments, put them in my DMs, wherever you feel comfortable, and let's chat about it. This Money Monday is going to be a little different because, we have something that we're seeing all over social media, all over the news. The market is down, and we haven't had to deal with that a lot in the last few years because we've had a pandemic boom. But, anywho, welcome. Oh, let me not forget the topic, stock market corrections, and we'll talk about what a correction is. Because there's a whole bunch of terminology, there's a whole bunch to know about this situation, this process. So, the market, it's down 10%. I think I read that the S&P is down about 10%. The NASDAQ, which is more the tech stocks, is down like 14 or 12%. And the Dow is down. Everything's down. Why am I smiling? Why is this like okay to me? Why is this, just another day in investing that we have to be used to? Because it's a good day for a long-term investor. It's a good day for somebody who is not sitting at a computer, like in the screen, day trading, praying that the stocks are going to do nothing but go up so we can make a profit. It's a great day for somebody who's not using debt to invest and leveraging themselves to the hilt, because when you're doing options trading, you're buying 100 shares. Your contract is for 100 shares. So when you see somebody on Instagram or social media and they've got these huge returns, it's because part of that isn't their money. They are trading options, 100 shares of each company that you see, with somebody else's money. And they need that to go up, or else they're going to get a margin call, aka the bank saying, yo, you need to add more money to this because the stock has gone down too much and we only loaned you a certain amount. So it's a good day for a long-term investor because we ain't doing none of that risky stuff. We are buying and we are holding. And when the market is down 10%, that means you're getting a discount on whatever it was that you were looking for. Now with me, I have patience when I invest. And what does that mean? That means, hey, I saw an IPO of a company. I hate IPOs. I know darn well they're inflated prices, but I'll always look at what it's supposed to come out at, and I'll set an order for exactly that amount. So if it comes out the day of the IPO, the initial public offering, and it's supposed to be $25 and it comes out at $150, what's Jayla buying at? She gonna wait till $25. I actually had one of those trades go through today. So I am actively buying because somebody bought it $125 and now, or $150, and now they're at a loss because the stock's at $20, $25. I got my stock because I had a plan and I was willing to wait. We're getting discounts, people. We're holding. We're not losing anything. So if you log into your brokerage account, it will likely say, depending on what you're invested in, it'll likely say you're down at least 10% today. You are not down unless you sell. If you sell, yeah, you're locking in that loss and there goes that money. There's no way to get that back unless, the stocks go on a run and you get the money back, but you've taken it out. You've cashed out. You've left the market. We're not going to do that. We're not going to feed into the news. We're not, because it's all panic, fear. Oh, this is the longest we've been down since October of this last year. You're always going to be able to say that. There's always a day that was worse than this day in the past. The fact of the matter is, if you've been invested for the long term, especially if you started investing last January, your portfolio could be up anywhere between 10 and 24%. Just basics. And now, this year, 1 month in, it could be down 10%. But think about that. I put in maybe $100. It went up 24%. And now, today, it's down 10%. I still have my $100 that I put in because I didn't touch it. Do I have the 24%? No. I have 14 right now. And it could go up again. It could go down some more. But the fact is, what I actually put in, safe, good. And it only gets better. It only helps the longer that you're in, because there are other factors, other ways that you are getting paid depending on what you've invested in. So how do we stop this psychology, this cycle of fear, this panic, this dread? Like, I don't want to put money in when the market is down. You understand the basics. So for most people that have taken my investing course, you've heard me say that it's lovely when we have years that you get 24% returns, but you've also heard me say it's not usual. And I always plan for that 7% return, that conservative, like this is what the market usually does consistently over the lifespan of the stock market, versus those unusual years. So you plan for 7 and you get 24%, you're always going to be a happy camper. Long-term investing though. So for the people who were asking about what they should do if their portfolio is down, a lot of people I noticed were not investing in their index funds. They were investing in individual stocks. So that's problem number one. You want to do that backwards. You want to have an index fund. You want to diversify, meaning you're buying into a collection of companies versus just one. One, you are at their mercy. If they have an off quarter, your money is going with it. Like, it's going down. But if they have a good quarter, yes, your money's going up for that moment. But having multiple companies that you are invested in is going to make sure that you kind of keep it level. It's slow wealth. We're not trying to rush it. I don't know how else to say it. If you want to rush it, there's a few gurus on social media I can point you to, because everybody talks about trading. It's sexier to talk about trading. Like, it's boring as heck to talk about being a long-term investor. All you're doing is just pouring your money into funds, into multiple index funds based on your investment risk tolerance, how much you can deal with the news and everything of the market going down, and what your time horizon is. How long do you have to be invested? It's psychology at its best and worst, and it's trying to sabotage your plan. But remember, we're planning for the long run. I just saw a story about how somebody was criticizing OBJ, he's a football player, and his decision to take his money in Bitcoin instead of taking it in dollars. Now, we're always going to be able to criticize a long-term plan in the short term. Like, yeah, it's going to look like you're crazy. You're planting seeds and covering them with dirt and then hoping for the best. And then when it doesn't come when you expect it, you're going to look like you're crazy. But as long as you're sticking with it, you're doing what the process tells you, watering, giving it the light that it needs, you're bound to come up with something if you stick with it in the long term. So right now, yes. Does it look like it's a terrible idea to invest in Bitcoin? Your whole salary as a football player? Yeah, it looks bad. But if you know you invested in Bitcoin, knowing that you didn't need that salary, knowing that you had the money to pay the taxes, and that money is going to sit there for decades, of course, you're going to look like a genius in the long run. That's investing, but that's long-term investing. And you got to block out the noise, people. So, what else? I've talked about how it's going to feel like you're gambling because your plan contains unknowns. That's where you step out on faith. Having a diversified portfolio may mean that all of your money isn't in one investment or one index fund. It may mean that you're considering your real estate, like if you live in a house and making that an asset. It may mean you have some crypto. It may mean you have something in the stock market. It may mean that you have a business. It may mean that you always have your backup income and your side hustles. That's how you truly diversify your life, having multiple streams of income. And you can do that. And it's okay when one of those streams is down in correction territory, which in the market means that it's down 10% or more. It happens. This is not new. Don't let anybody make you feel like the sky is falling. This is just the market. We've been overdue. And there are a lot of people, as you see, like me, that have been waiting on some things to go on sale. So, besties, stay calm. Don't invest in those, I call them pump and dump schemes. When you see something on the news and it's gone up 1,000%, know that that's not a long-term investing strategy. Like, it's just not. It went up 1,000%. Now, we wanted to do that over the long haul, but for the majority of the time, all of the meme stocks that you see, all of the heavy, like, getting a lot of press, those are normally pump and dump. It means it's going to go up. And what goes up is going to go down. And it's going to leave those who don't know enough about it holding the bag and not the good bag. So if you've gotten yourself into that situation, just go away from the individual stocks for now. Learn more about index funds. And yes, there is a stay calm. Get back to your plan. Even if you invested in the meme stocks and you had a plan, stick with it. There was a reason you decided to put your money on black. Stick with it. But if you need help, there are other advisors that can help you. And most of them are going to tell you, nah, you need to have that long-term, passive, low-fee, low-anxiety investment in your life, depending on what your goals are, so that you're diversified. All right, y'all. I have chatted more than enough. I think I got through all of the questions. Let's see. Do your own research. Don't let me forget about that. Learn about the market. If you need help, like I said, my investing course actually shows you a brokerage account. It shows you what it's like to open these accounts, what the stock market is, how much that it goes up over time, the returns, dividends, the multiple ways that you can set up your portfolio. Because, yeah, looking at your Robinhoods, your Weebles, your Coinbases, everything's going to have you stressed. And the one reason it's going to have you stressed, Ben, is because Robinhood does not allow you to buy index funds. So you got to get that adult portfolio, because you're invested in mostly stocks. Hopefully you have a few ETFs, but mostly you're buying individual things. And you're just going to have to hold on for the ride, sir. Like everybody said, hang in there. But if you need help and don't want to deal with this, I know a whole bunch of investment advisors that will take over the management of your money. If you want to learn it, chat with me. If you just need somebody to be there and encourage you, you got your wealth best friend. I appreciate y'all all for coming and letting me pop in early. And I'll be around for the rest of the day. Happy Money Monday, y'all. Bye.